Hello, everyone, and a very warm welcome to today's major markets update for Wednesday, October the 4th, 2023. The curious case of the missing wave. Yes, sometimes futures markets do our final wave or our final bidding overnight, and we simply won't see it in cash market. It is possible that this has happened today again. So let's review the charts and see what we got. Remember the bigger picture, the ABC, we could still do one last fifth wave to about 4,800 easily, and then we start the process of a larger B wave. Alternatively, we're going to get a 3, 4, and 5. Okay, even the 5 of 3 points to 4,800. Excuse me. So we don't know yet exactly if we are seeing 5,000 or only 4,800. But as long as we remain above 41.85, and especially 41.65, all things are good. Below 4,200, first warning for the bulls. Below 41.85, second warning for the bulls. Below 41.65, I would consider it lights out. So, this is seasonality. Seasonality has us, according to equity clock, bottom early, excuse me, October, as you can see right here on Q. It is today, October 4th, and this could be right there on Q. I don't have much more granularity than this, and then we should see a rally. If we use Season X has a low late September, and then we rally pretty much also into mid-October. You see there's slight variation, but the overall picture is quite the same here. May, we have the top and the drop, and then June, top and then the drop into late June, and then a rally into July, kind of flattish. August has Season X more bullish. I don't know why this is, what the difference is. Could be the number of data points. Look here, actually, I found it. This is a 20-year range, okay? So this is a 20-year range, and this is 95 years. So technically, Season X should be more accurate, okay? Anyway, I think we have a general, reliable, reasonable pattern of a low being struck in October and then a end-of-year rally. The low being struck in October, end-of-year rally. Okay, so we have some more weakness in March, according to equity clock. But I don't want to hang up too much on this seasonality. The overall gesture is we should bottom soon and then rally into end-of-year. Question is that going to be a fourth wave, whatever, etc. Right? But we're getting quite close to a reasonable bottom. Always remember to have your stop losses in place. If you don't have a stop loss, you need to have a mental stop of how much you're willing to lose. Because if you lose too much money, it's going to be very difficult to make it back. A 50% loss requires 100% return to get back to break even. This is the general wave count that we always track. These are the ways you can use me to your advantage. Not this one, so let's go straight to the charts. I'm going to go straight to the charts, and this is a possibility of a rather extended wave 4. So we bottomed for wave 5, right where we had to. Let me show you that. First and foremost, we bottomed for this blue wave 3, right at 161.8. The blue wave 4 definitely fell a bit short, but I already warned you yesterday that fourth waves often disappoint. And then this fifth wave, exactly, so there, bottomed exactly where it had to, 176.4. So then we can consider this one complete. That was wave 3. And now a rather complex wave 4. Again, since the wave 4 was a little short, the wave 5 was a little short, 176.4 right to the target. So I personally went long some calls, sold them at the open, etc. Yes, pretty good. And now you can see that we have a rather extended fourth wave, if this is still a fourth wave, because the normal target zone would be this. Now we can be dealing with a ending diagonal where wave 1 and wave 4 overlap, but I don't think they're too reliable. We pretty much need to now drop below today's low to confirm this wave 5, which shouldn't go much further than about 42.06. Why? That's a nice 5-1 relationship. That's pretty much all we're going to get. So a marginal lower low is still possible. Okay. But I must admit that this starts to look more impulsive to the upside and that the low is already in place. How would that work? the low would already be in place if we consider today's low a failed fifth wave. Okay, please mute your laptop. I can hear you. And otherwise, I'll just mute you. Boom, did it. So, how would that then work? That would work with a failed fifth wave. Okay? Why? Because in the futures market, we did make a lower low right here at 42.01. So we did reach this target zone. Okay, we reached it already. And sometimes it happens that in the futures market, we get the low in place. We won't see it in cash because by the time cash opens, we have already rallied substantially and cash will just not see that low. We have then technically a ending diagonal wave 5 here in orange, or 5 of C or 4. Okay, with wave 5 and 5, etc. Also an ending diagonal. It works. Wave 3 here is not the shortest wave. It is longer than wave 1. 1, 2, 3, 4, 5. And now on our way higher. Of course, a breakout above 43.33, right? This high will really put us in the low is already in place camp with a serious warning above 42.75. Why? Because fourth and first waves normally don't overlap. And if they do overlap, it increases the odds that it is not a fourth wave anymore. So please keep that in mind. And we did get 5 waves lower here. Okay, if you see this 1, 2, 3, 4, 5, I have a hard time putting that into this entire rally from today as a corrective price action. This really looks like nice non-overlapping 5 waves lower, in my humble opinion. So please keep that in mind that we might have struck the low overnight. That is the curious case of the missing waves. And again, we have a picture perfect 200% extension here for this orange wave 5 measured from the high of wave 2 times the length of wave 1. So technically, we've done enough. So please remember, we are really wrapping up the fine scribbles and betting big time on the last fifth of the fifth wave, etc. Might, from a swing trading perspective, not be the most profitable. Okay, please remember that. From a short-term intraday trading perspective, you can do whatever you want to do. You can trade 5 minutes. It's less of a concern. But please keep that in mind that we might have bottomed already. This would be the curious case of the missing fifth wave that we simply don't see in cash market. We're very close, but could technically be enough. Alternatively, right, we have 4 and we're going to go 5. Now 5 will target more than 42.10, 41.95. Again, 42.04 was reached in the overnight futures market. Please be aware of that. Okay, we break above resistance, 43.35-ish, lowest in place. Okay, still possible to go to again 42.06. Starting to get questionable. Things are starting to look pretty good. There are technically enough waves in place with a filled fifth. I don't like filled fifths either, but it is what it is. If that's the case, and that's the case, the futures market is a tail wags dog or dog wags tail type of environment. It happens. So please be aware of it. I can't warn you often enough. Forewarned is forewarned. So what are other people seeing? This was posted by Alvin Gilbert this morning on Twitter. He's also looking here now for a ending diagonal, noting that above, of course, resistance, all bets are off. Okay, so then all bets are off. And I must say, again, there are enough waves in place at overnight low to consider this wave 5 here complete. Okay, this would then be 1, 2, 3, 4. Okay, 1, 2, 1, 2, 3, 4, 3, 4, 5. So technically, we have enough waves in place to consider this decline complete. He's recognizing it. So please consider all of this in your trading assessment. Might be a good time to sit on your hands, see how everything unfolds. I don't know what you want to do. That's something else. Also here on the NASDAQ, we have now technically a rather overlapping price action where this orange wave 4 has overlapped significantly with this orange wave 1. So that's already a warning sign that we might have bottomed with a failed fifth. Okay, we got today or yesterday to as low as 14,500, which is awfully close to this 14,400 something. Also note this massive positive divergence we're dealing with on these hourly time frames. Okay, look at this. All right, divergence is only divergence till it's not, but sometimes it matters. And at yesterday's low, of course, we had a higher high on the MACD. This is like double, triple divergence. So please keep that in mind. We go back above this wave 4 high at any time going forward without making a lower low. And then the low is in place. I'm going to look for 4800 on the S&P 500, 16,600 plus, I believe it is, for 16,100 to 16,600 on the Nasdaq 100. So indeed, we could have had a filled fifth wave. All right. Also here, start to see a lot of positive developments on the technical indicators are starting to turn up. Semiconductors I shared with you yesterday. Also, this one could technically have bottomed. Okay, it is possible to count it as such. Then we have a 1, 2, 1, 2 here instead of a 1 and a 2. And this is then 3, 4, 3, 4, 5. And one of the reasons I'm thinking it is because we were quite above this typical fourth wave target zone. If we go above, what is it here? I believe 3510-ish, then the low is in place. Dow Jones looks also very bottomy. Okay, we reached exact lower end of this ideal wave 5 target zone. Nice strong reversal. Now the market can decide if it wants to do 4 and 5, or if this was all of 4, and we get another 5 of this expanding ending diagonal potential. Okay, above 34,000, then I'm going to look for about 36, 37,000. Okay, please remember the price action in Dow Jones is anything but bullish. This is extremely messy overlapping. So all these bigger picture prognostications are to be taken with a large grain of salt. Swallow the whole shaker, because odds of being correct in such nightmarish sideways market is rather difficult. So we're going to track, see if we get 3, 4, and 5 lower. So 3 should have bottomed, 4 and 5. Above 34,000 from current levels, I'm going to look for 36,000, right? That's the ideal target zone with low odds guarantee of success because of the overlapping price action. Please take all of that into consideration. I can't help it. I cannot help that the market is as such, that we are pretty much where we were a year ago. This is a sideways slaughter ship market. There, I said it. Okay, especially this one. Please keep it in mind. This is not a healthy bull market, not at all. Now here's the IWM. The IWM definitely went a little lower than I would have ideally liked, but it is what it is. I don't make the market, but we have 5 ways lower. I would have liked to see it bottom, as you can see. So ideally, right, based on trend line. Trend lines are always a little bit subjective. Would have liked to see it bottom 174. Well, we got to as low as 169. Okay. It happens, and trend lines are always a little bit more subjective on how exactly do you draw them, right? How do you draw the trend lines? Is it something like this, for example? Could be, right? It's reasonably okay. Same with this trend line. Are you going to draw it through here, or are you going to draw it there? It's more subjective. So we have to use it as a guideline, but I think we have now technically enough waves in place to also consider the IWM has haven't bottomed for either wave D or wave B, or only wave 3. 1, 2, 3, 4, and then 5. It is possible that that's the case. This would then follow, of course, along the same lines as the Dow Jones. I can't discern between the two. And then we have 5 waves lower from this high. Looks pretty good. Where we had about C is 1.236 times A. Okay. And very close to the 5-1 target zone. Remember, oftentimes the market has a 5-1 relationship. So this is the length of 1. And from there, as you can see, got pretty darn close. 5-1 targets 160. What did it target? Let's have a look here. 169.81, and we got 169.09, I believe it was. So that's pretty darn close. Okay. Pretty darn close. Now we need to see if we either get this larger C wave higher or only an E wave higher. I don't know just yet which of those two it will be. But again, the upside potential is 196. Downside risk has become minimal. And also from a swing trade perspective for this wave 4 and then a 5. Wave 4 should go to, in this case, if it's true, around 176 plus minus 2. So there's plenty of upside for that from a short-term trade. I do want to point out double, triple positive divergence now on a lot of indicators, especially on money flow. All right, less and less money is pouring out at these lower levels. So we have a lot of positive divergence. It's only a condition, not a trigger, but boy, this is as good as it gets. If this is the case, it will also start to support the fact that the other markets have bottomed. Right? This looks as complete can be. This looks really nice, especially since we bottomed, within $1 of the ideal target zone, which of course on $170, less than $1, is really within 0.5%. It doesn't get more accurate than this. Yes, the trend line wasn't respected, but a trend line is only a trend line, depends on how you draw it. Do you draw it on the wicks? Do you draw it on closing basis? Where do you start it? All those things. I'm not going to hang myself up on that too much. All right, so those are all the indexes, okay? So it tells us that we are probably closer to a bottom than to a top, and the bottom might as well be struck overnight. Also, seasonality now starts to suggest we should look higher. The other thing I want to point out is market breadth. Look at the bullish percent index for the S&P 500. It's now below 30. Okay. Bottom pickers can look for bullish reversals from below 30 to, of course, to back above 30. Okay, so this is quite washed out. And we only have data since about 1996. But as you can see, if you would zoom in, oftentimes, no, not that one. We get very close to tradable bottoms, okay? Very close. Here we were at the October low. I think here we were at the March low. Again, here we were at the August low, I believe it was. Of course, this was the 2020 low. This was the 2019 low, right? All of these are strong bottom indicators, okay? Sometimes we need to wait for some positive divergence, but this was just a bounce in the lower low. But you get the idea, right? Below 30 is very good number to expect a bottom in place. Not all the time, of course, but most of the time. Can just be a bounce, okay? And bear markets are, of course, different than bull markets, but you get the idea. This supports that we're getting very close to a tradable bottom, okay? Just wanted to make you aware of that. And we're going to look now for a reversal back above 30, increases the odds to the lowest in place. How we're doing on new lows? Well, they definitely spiked quite high yesterday and fell quite nicely today. I don't know what the closing numbers are. Will be updated this night. But this looks also a little bit of a capitulation type of spike, just like we had here in March, just like we had here in May. Again, should induce at the minimum a bounce or the low is in place. Definitely not the same number as we had in 2022, which also still suggests this is reasonably benign. But remember, we do, of course, have our bearish alternative wave count still in place. Remember, as I said, below 4200 is warning 2, below 4185 warning 42 warning 1, 4185 warning 2, 4165 warning 3. Now here's another one that should give the bears some pause. This is the McClellan oscillator of the S&P 500. I've shared this one with you last week, where we had positive divergence. Now we have double positive divergence. This is as good as it can get, okay? Normally, we have just these type of divergences, as you can see, to kick in a pretty decent rally. Also here in October last year, September, October, look at the divergence and what eventually happened. So this was almost, I would say, quadruple divergence. Now we have triple divergence, double. This is single, single, single. Well, here we had actually also triple divergence. Similar, see this? You see this? So this is giving me as a bear definitely pause, okay? So we're going lower and lower in price, but less and less stocks are participating in this decline. It means the decline is exhausted. With the current data at hand, this is what it tells me, okay? Please take that into consideration for your trading actions. How to resolve that then with, for example, 4 and 5? Boy, then we really need to start looking for quadruple type of divergence. It's possible, right? It's possible, We could still be like here and whatever it is. But I think this starts to tell us that the downside risk versus the longer term upside potential is becoming more and more in favor of upside potential. Must be noted, this is, boy, I have not seen it this good in a long time. Anyway, moving on then to the summation index, which is, of course, the recliner oscillator from today, added to that of yesterday, which was added to the day before yesterday, etc., etc. And massively oversold. Also on the RSI 5. We did not get the positive divergence that I was looking for, but I want to point out that we are, of course, now below 8.5, and that gives us often an indication that we are much closer to a low, of course, than to a high, right? Not that one. I don't know. Just fix them all. Look there. Look there. Even here, right, we've got a serious bounce. I just wanted to make sure. This is always, I like it, a nice ebb and flow chart. It's the way I look at it. Same here. And we've got a pretty decent bounce, which was, of course, the second wave. And then 1, 2, 1, 2, 3, 4, 3, 4, 5. Technically, also from a pure open closing prices basis, technically enough waves in place to consider the entire correction that started this summer, or the summer in place. Very oversold. So I think, again, the tide has washed out pretty well. It's a very low tide, minus tide pretty much. It's time for the market to flush back in. Okay. Lastly, the PMO buy or sell indicator, no update for today yet. But again, after this fourth wave fake buy signal, we are now bottoming out once again for another setup. I think if we get another buy signal, it is much more reliable than it is kind of similar to what we saw here in March. Okay. Something like this, similar to what we saw here in December. So you get the first initial buy signal, it's a bounce, last sell-off, okay, and off we go. But here, same in October. So please be aware of that. Okay, so this is a very good setup. Also, this one starts to tell us we're closer to a low than to a bottom. That's really all I have for today. I hope you appreciate it. I think we went along a lot of lines of evidence. The wave counts, start to see overlap. Curious case of missing waves. Futures market have already nailed the downside. Might not show up in the cash market. Market graph is really showing some strong positive divergence. Haven't seen it this strong since almost a year, which should give the bears pause. And a lot of indexes have reached their downside target zones. The IWM, the Dow Jones, and other indexes might indeed have already bottomed, like the semiconductors and the Nasdaq 100. Take care, trade safe. See you all on Friday.